New weekly update video. We're gonna start again with SPX structure, and then I'm gonna go to the Google chart. I'm going to post that on my socials, and then I'm going to continue with a whole bunch of individual stocks that were are requested by the Patreon members. Um, so let's just start. SPX, um, very bullish the last week. Um, Lots of short covering going on. It makes sense because almost always when you have a very long trend, you go sideways for many months in a row. If you then break down, you're going to have a deep correction. So that's what we saw last year. It's what we saw in 2022. It's what we saw in 2015. We saw it. Um, and basically, long trend, sideways, deep correction, long trend. At least a long trend is what I call when it has multiple legs. When it's just the first pass, it's much stronger to trade it with trend. Um, you can also make an argument that there is even more of that. So if you're long sideways, selling off like 30% or so, 20%. Um, Usually you have these deep corrections, and even when you go back to like 100 years ago, then you see the same multiple legs, long sideways, deep correction. Um, Here, basically the same. So if you see this very long here, you can say this is the second leg. And maybe you could say it's an example, but you could also say that, hey, it's not, it's been a range, it's been the first breakout. So this is where the market shifts from trading range to a trend, and then this is your first pass. Here you have the long sideways, and then you break down, but also it's like, well, this is 20%. Maybe you can compare this a little bit, and then, but when the trend gets older, you basically always see that if we go sideways for many months in a row, you have these deep corrections. And I personally, I just trade what's likely, and I do not trade what's unlikely. And so what happened here? It was an unlikely event. Um, but yeah, unlikely events happen too, and that's okay. So now looking ahead, I assume this is buying is so strong we're gonna make a new all-time high, um, and then we need to assess what the market is going to do because yeah, anything can happen. Um, More sideways, that would not be unlikely here. So then we fail, we go sideways, and then we decide later if we go down and up. Um, 30% of the time when you are in a long trend, the market decides to accelerate even more. That happens 30% of the 30% of the time. So you can see it. You have trend, accelerate, down. So usually you have a trend, you go sideways, trend, you go sideways. Um, Sometimes trend, you go sideways to down, trend, you go sideways to down. But if you look back, any time frame, you can look a 5-minute chart, a 1-minute chart, it doesn't matter. About 30% of the time, a trend will accelerate to the upside. So it's also what you saw up here. Let's see. So here you're trending and then the market decides to go up. You can also make an argument. So after it accelerates up, it usually comes down. You can also make an argument, we are trending here and then the market decides to accelerate up, we are going down. So yeah, when a trend is going on, 30% of the time it decides to not go sideways or down, but it decides to go up. So it could happen here like this. It's more likely now than it was last week. Um, but yeah, for now I'm not going to bet. I'm not going to bet on that. Um, I may switch when we go sideways here and then the trend starts to pick up. That's when it gets more likely. I think we're going to make a new high here and then continue sideways. Also because yeah, oil is still $90 and I think it's going to go back higher soon. Yeah, the economy will feel that not not too long from here, couple few months ahead probably. So if you look back at history, 1970s, 1990, 2008, 2022, when oil spikes fast, usually the market initially shrugs it off and then it lags, correction follows. So immediate effect is often muted. Delayed reaction is more common. Well, that's what we also see in the charts. If the oil spike is demand driven because of strong economy or a gradual increase, it doesn't matter that much. But it's bearish for stocks. Usually when there is a supply shock, war or disruption, or a sharp spike right now. So this is where what usually happens. But yeah, usually um, there is delayed reaction. So combined with the structure here, that yeah, this trend is it's getting exhausted, it's getting old. It needs to before there is any high probability bull setups, it needs to correct. Um, needs to correct a lot more. Right now, I do not see myself go in a full bullish mode. There certainly are bullish stocks along the way that I will be trading from the long side. But more likely I will remain balanced with just as many longs as shorts. And later on, when the market turns bearish again, I will close most of my longs, and then I'm going to be in a more bearish mode on my portfolio. So yeah, I wanted to show Google. As you know, I was shorting this leg, and obviously I closed the position. I closed this really well around the bottom. I was expecting more of here, but when you have this, when you make a very large profit, you always should be tight on your profit. And then I saw this very fast, strong rejection coming, and I knew that this was where the bears would start covering. So yeah, I did post it on Patreon, my exit. It was, I think it was right here. I don't even remember. But what I was going to say about Google, um, yeah, I'm not seeing myself getting very bullish here. I'm just going to wait. So mainly because this is an acceleration to the upside, and you can look back history. When you have a trend, you accelerate to the upside, it's going to come down. So you have a trend, let's go to accelerate to the upside, it's going to come down. So that's what you almost always see. So here we have a long trend, it's now accelerating to the upside. Yeah, of course, could go higher, I don't know. 500, possible. That's what we have to see. But eventually it will come back down, because if something starts to accelerate, it usually is a sign of exhaustion of the end. But we could go to 500 first. Personally, I will not be trading this because we may not reach 500. We go a little higher and then we start the correction already. The correction is just the correction is looming. It could take another year. That's what we have to see. I'm just not in position and just wait until this bull euphoria ends, and then I'm gonna start shorting again. Um, how should you trade this from the bull side? Because I know there's lots of people listening that they're always in bull only modes. Well, Google was trading very well from the bull side. If you see these flags, flag, sideways, it's been an amazing stock to trade from the bull perspective. Um, so certainly Google had some very high probability setups. Um, Trades really well. It's going to be very profitable, very high probability, very good risk reward. Yeah, you can draw many of these. So if you go sideways for a long time or after a correction or in a bull flag, so bull flag sideways, you long above, put your stop below. Another bull flag, so strong up sideways, consolidation, buy above, stop below. Here correction. After a correction, you can be a little bit more aggressive. Yeah, wait for some double bottom, higher low to form, and then you can put a box around it. Long above, you can place your stop up here. Here you just go sideways. You can even put another box inside here. So you long above, you put your stop up here, and you ride it as long as you want. You miss this, no problem. You see the market going sideways here for like a year or so, and then you can even put another small box in here. So then you long, when it breaks out of this box, you put your stop below. You can do it here, you can do it here, you can do it here. You may even take this one too. But here, yeah, I'm not seeing anything that's high probability. We may come down right now, we may come down after an all-time high. We may go to 500, we come down, but it's just not high probability. The risk reward is not good as well. If there would be another small little bull trade in here, if we go like here, correct, and then higher, then I would be taking the long. If you would make another bull flag here and then a higher low, you can long up here, put your stop up here, then your risk reward is extreme. You don't have the risk that it's going to, yeah, if it does reverse, your risk is very small, but the reward can still be great. Well, that's on the monthly chart, but I usually look at the monthly chart for direction, and if I see something nice on the monthly chart or on the 2-week chart, I'm joining 24-hour chart to find some entries with small stops. Yeah, so that's about Google. So now I'm going to continue for members only, and I'm going through all these stocks. So